Good morning, everyone, and welcome to NYSE TV Live. I'm Kristen Scholler here in studio at the New York Stock Exchange. Well, the Dow giving investors some holiday cheer yesterday, ending what was a 10-day losing streak. We've seen some profit taking of late. Comes as investors continue to digest Wednesday's Fed decision, in which the central bank did move forward with a 1/4 percentage point rate cut. It also signaled that we could see just 2 rate cuts next year as opposed to 4 that were previously anticipated. Well, investors, as I mentioned, have been taking profits with the S&P 500 still up more than 20% this year, even amid some recent weakness. Now, another headline weighing on the minds of investors is a looming government shutdown. Markets we see under a little bit of pressure this morning, with futures pointing to fractional losses at the open after a House spending plan couldn't pass late last night. We'll talk more about these stories, of course, throughout the show, but let's take a look at what is on tap in this next hour on NYSE TV Live. As Wall Street continues to react to the Fed's latest move, an inflation report closely monitored by the central bank came out about a half hour ago. An economist tells us what it means with a new year on the horizon. Meanwhile, BitGet's CEO Gracie Chen is going to join me to discuss the biggest storylines surrounding the digital asset space, as well as how the recent crypto rally is benefiting her own platform. And with the holidays just around the corner, it is getting chilly here in NYC. We cast a spotlight on one festive event taking place in Jersey City, not far from Lower Manhattan. The organization's marketing and art market manager joins me to discuss what is in store for attendees. Well, the state of the U.S. economy continues to drive the narrative on Wall Street in lieu of Wednesday's Fed decision. This morning, investors got their hands on the latest PCE data. That's the Personal Consumption Expenditures Index. It is the Fed's preferred inflation gauge. It measures the pace of price gains. So on a year-over-year basis, that number came in at 2.4% in November. That was actually a hair below estimates of 2.5%. And of course, in the month of November, we saw it rose just 0.1%, also a hair below expectations from October. If you look at the core numbers, they strip out those volatile food and energy prices. When we heard from the Fed on Wednesday, he said it's hard to put energy in these inflation reads because it can be so volatile from time to time. That core number coming in at an increase of 2.8% in November. And of course, on a month-over-month basis, we follow that number too. It was up just about 0.1%. So the fact that these numbers were actually a little bit better than expected is now pointing to lesser fractional losses that I see here at the open. Well, joining me now with more is Tuan Nugent. He's an economist at RSM US. Tuan, it's great to have you on the show here. And I think as I look at these numbers, our viewers might be wondering, well, why are markets down if the economy continues to show signals of strength? What can you tell us?
There's no doubt that this is a very good and constructive PCE inflation report that both the market and the Fed can be happy about. When you look at the overall number and then the core metric, they all came in below the Fed's long-term target of 2%. And even more important than that, if you look into the details, some of the key components like shelters, car insurance, and financial services did show major improvement in November, the one that we saw from the CPI and the PPI report earlier this month. But the bigger question is that, is it enough to offset the negative sentiment of the market at the moment about the Federal Reserve and rate cuts in 25 or not, when we have seen major drop from the equity market and the bond market since Wednesday? I don't think so. I think today's good inflation report has been already priced in the market, and the market and the Federal Reserve have already looked past today's report and more into the future, more into about how the Federal Reserve will react when it comes to rate cuts in 25. And this is really evident when, if you can notice from the Federal Reserve Chairman Jerome Powell presser on Wednesday, that he expected today's report to be a good report, but that didn't stop him from being hawkish. And that didn't stop the Federal Reserve in general from being hawkish when it comes to rate cuts in 25.
I'm interested to hear your take on this element, Tuan, which is where inflation goes from here. Even though the Fed's projection does expect it to fall fractionally by several percentage points in the new year, it is still above the Fed's long-term 2% target. What is going to keep that metric sticky?
I think the last mile of inflation is going to be sticky in 25 because first of all, when you look at inflation tends to increase in the first quarter of the year because of the seasonal factors. We saw the same thing in the first quarter of this year. And then in the medium term, we should expect fiscal policies in 25 to be inflationaries when it comes to tax cuts, when it comes to higher tariffs, and when it comes to trade policies. Now we are talking about inflation between 2.5% and 3% versus the 2% target rate. We are not talking about 8% or 9%, the one that we saw in 2022 or 23. So that's last percentage point we think is not going to be majorly influenced by the short-term monetary policies or fiscal policies, but they will be affected by the long-term structural changes within the economy. And regardless of the types of fiscal policies that we're going to see in 25, we think that the long-term inflation number will settle around 2.5% or a little bit above that because of the structural changes when it comes to demographic, when it comes to re-globalization, and when it comes to geopolitical tensions.
What is holiday shopping and the prices that you're seeing at stores and online, Tuan, indicate to you about how this holiday season might shake out?
If you look at the spending number for November, it was a very strong, solid number. And we're expecting spending to continue in the last month of the year and also in the first 2 quarters of 2025 when we have those supporting fiscal policies in place. And because of that, we think that overall demand will put some pressure on prices and wages moving forward. And that is why I think the Fed is right. They're expecting higher inflation in 25.
You know, the conversation of tariffs continues to be one that is circulating down here on Wall Street. Tuan, I'm sure obviously it's something that you're watching as well. I'm interested to know how it might be implemented into some of your forecasts come the new year. As we know, a new administration with promises of tariffs is set to take effect on January 20th.
I don't think we should get ahead of ourselves when it comes to tariffs because we don't know yet about the scale and scope of tariffs in 25, but we know for sure that we should see some higher tariffs in 25. Now, if you notice what's going on within the Fed's forecast, I think this is very important to emphasize that this is probably the first time in a very long time that the Federal Reserve is factoring in fiscal policies in their forecast. And that means they are being less data dependent and more forward looking. What I mean by that is when the Federal Reserve factors in the fiscal policies in 2025, they are actually factoring in forward looking factors. And because of that, obviously, we have been quite critical of the Federal Reserve in the past year or so of being too data dependent. And because of that, this is quite a good sign when the Federal Reserve is thinking ahead of time.
Tuan Nugent, economist at RSM US. Tuan, thank you so much for joining, of course, amid what has been a very busy week of economic data.
Thank you.
All right, everyone, well, stay with us because while the Fed has dominated headlines this week, it is cryptocurrency that has been a front page story for the past month. We have been tracking Bitcoin, and we'll have more on the latest developments in this space up next.
So, Rob, you are the 11th CEO in Hekla's 133-year history, and you're actually 2 weeks in. You are ringing the closing bell today. Tell me, what appealed to you to take over the CEO position?
Well, firstly, this is a real honour, and what I found truly appealing was Hekla's legacy of being a leader in the silver mining space, a really incredible portfolio of assets, and a deep-rooted culture of innovation. So, for example, the underhand closed bench mining method, which was developed at Lucky Friday, that's really testament to that spirit of innovation, let's say. That not only improved safety, which is a core value at our company, but it really significantly boosted production. The other thing I would say is that the commitment to continuous improvement, that extends from everything from community to ESG in general to environmental stewardship, and they're things that I deeply care about. Above all, it's really the talented and the dedicated people at Hecla that really is driving forward the company's success.
Now, what strategic direction would Hecla take under your leadership, and what will be some of your key priorities for Hecla?
As the largest silver producer in Canada and the United States, Hecla really boasts a very high-grade silver portfolio with long reserve mine lives, underpinned by our flagship mines at Lucky Friday and Greens Creek. And so our strategic direction is really going to focus on maximising the value of our really extensive portfolio, and that includes finding a measured pathway to optimising production and profitability at our Keno Hill mine in the Yukon. So there we need to make some investments in some critical infrastructure, foster strong relationships with the First Nations of Nacho Nyack Dun, and really set Keno Hill up for a platform to be a very successful operation and turning it around like we did at Lucky Friday in the recent past.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio. Well, 1 month from today, on January 20th, the current SEC chair, Gary Gensler, will officially step down from his post as President-elect Trump takes office. I recently spoke with a former SEC branch enforcement chief, Lisa Berganza, about what changes could be coming for that agency, and here's what she had to say.
The biggest change is going to be in crypto policy and enforcement. The SEC has spent the last 4 years under Gary Gensler bringing enforcement cases against large entities and small that have not engaged in any fraud. They are simply unregistered broker-dealers, according to the SEC, or involved in unregistered offerings. And that is all based on the SEC's contention that almost every digital asset is a security. So the big change is going to be a shift in that policy. Mm-hmm. And frankly, you know, a willingness from the SEC standpoint to encourage Congress and also to, on its own part, develop specific regulations and a regulatory policy that addresses the character of digital assets, which is very different from traditional securities.
Lisa, I think a big question that a lot of people have is how many ETFs, for instance, in the cryptocurrency space, could we see approved under this agency led by Paul Atkins, of course, the president-elect's pick, whether it's a Solana ETF, perhaps even an XRP ETF?
I think there will be a huge number of ETFs approved. Paul Atkins' approach is that there should not be such a great deal of regulatory oversight. So whereas you saw under Gary Gensler's SEC a hesitancy to approve crypto ETFs, I think under the new administration, you'll see a great deal of approval and no delays in approving additional ETFs. And then investors will make their own decision on what they wish to buy in terms of those various offerings.
Mm-hmm. Well, sticking with the theme of cryptocurrency, Lisa, I think some people are also wondering what cryptocurrency, specifically in the stablecoin market, might look like with a new SEC chair. Specifically, we had seen, for instance, the Ripple stablecoin available for trade just yesterday.
We're going to see a great deal of variance offered. And again, you know, Paul Atkins' approach is let the marketplace decide what should succeed and what should fail, not regulators. He's very much a free market person. He quotes, Friedrich Hayek and is very much an advocate of, a libertarian sort of approach. Mm-hmm. That said, he is still a believer in the fundamental mission of the SEC. He's not an SEC dismantler or somebody who believes that there should be no regulation. He is an advocate of the enforcement division doing its investigations and bringing enforcement actions for fraud. He was a big advocate of penny stock fraud investigations and enforcement cases. So he is not the type of person who is going to sweep away the entire SEC or possibly even, pare it down to a shadow of its current state.
Mm-hmm. ESG, I think, also something in focus, as is cybersecurity. Lisa, let's start with ESG and what we might anticipate in terms of disclosures or even really requirements on companies going forward.
That is another area, ESG, where he is likely to sweep away all of the requirements for disclosures. He is not a believer in ESG. Back when he was at the SEC, it was just, social engineering from his perspective. But he is not a fan. He is very likely to just, from the get-go, have the staff just stand down on all investigations, on enforcement, and any ESG initiatives.
And what does Paul Atkins mean for cybersecurity when it comes to potential breaches that companies might witness?
This is another area where there will be a significant shift. The SEC has been very aggressive in going after companies for not disclosing immediately, almost, or within days, a cybersecurity breach. And that has been excessively burdensome because it takes time to understand and to know what you even would disclose publicly or to your investors about a breach. These are things that develop, very quickly, but you requires significant investigation, and that's not something that the SEC has really allowed for. They have a rule that says you have to disclose within 4 days, and that's an incredibly short period of time. And just to note, the SEC had its own cybersecurity breach, and that wasn't disclosed for a long, long time. So, the SEC itself needed time to investigate and understand what the implications were before disclosing.
Our thanks to Lisa Berganza again for that outlook here as we approach 2025 when it comes to SEC policy. Well, up next, we're going to take a closer look at the latest movements in the cryptocurrency space. To add to that interview, stay with us.
Viewers, a little brief overview of Arcus.
Arcus is a networking company. Essentially, we are kind of deep down in the plumbing that enables a lot of the packet flows that happen between computers that are in data centers and in between data centers and edges. And a lot of people have heard about companies like Cisco and Juniper and Arista, as well as Ericsson and Nokia in other parts of the world. So we are essentially a new age, next generation networking that does things similar to what Cisco's and the Aristas of the world do.
What sets you apart, though, from your competitors?
We are a programmable, software-driven networking fabric for routing and switching. So typically our competitors sell boxes, and so the box could be a router or a switch that goes inside a data center on top of a rack or in between data centers. We have come up with a network operating system that is universally applicable on top of different form factors of hardware, different vendors. Like we sit on top of Broadcom's hardware, we sit on top of NVIDIA's hardware, we sit on top of Intel's hardware, and then we can become a common network framework and fabric for everything from the edge to the aggregation points to the core of data centers, which becomes super pertinent for the AI wave.
And what would you say your experience has been being a part of the NYSE Wired community and how it's helped leverage your exposure on a global scale?
Oh, it's been tremendous. First of all, I think it's a privilege being a part of this network. Just the interactions and engagement and the introductions. We had a great happy hour here at the NYSE, and it was fabulous to meet a whole bunch of new customers, prospects, investors. And with a company that's growing as fast as we are, and with the importance that we play in our customer networks, it's a great catalyst and essentially.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio. Well, ever since President-elect Donald Trump's win in November, the cryptocurrency space has seen an unprecedented tear, with the industry, similar to the stock market, still volatile at times. I do want to bring in my colleague, Trinity Chavez, with more. Trinity, good morning.
Hey, Kristen, good morning. That's exactly right. While the price of Bitcoin has rallied over the past month and a half, there was some noticeable pullback over the last 24 hours. The price of the most valuable cryptocurrency falling all the way to about $92,000 a token, before bouncing back slightly to about $95 a token, $95,000 a token. Now, remember, Bitcoin was trading at over $108,000 a token at one point just recently, as this past Tuesday. Joining me now for more on this is CEO of BitGet, Gracie Chen. Gracie, good morning.
Morning.
Now, this has been a story that we've been following here closely on NYSE TV Live. What should crypto investors be mindful of when it comes to the volatility in the market?
So cryptocurrency in general is a very volatile market, I have to say. I started buying my Bitcoin, Ethereum, and XRP in 2015. I joined BitGet 2.5 years ago, running one of the largest centralized exchanges. So everyone, as an investor, keep in mind this industry is highly volatile. That's the key thing. And of course, once the spot ETF of Bitcoin and Ethereum was approved January this year, there were lots more channels for the traditional financial industry to enter, and also like retail users, institutional clients to invest in the space rather than, and also help them custody the Bitcoin and Ethereum. I think that's also very key.
Now, the slide comes after the Fed signaled it would only cut rates in 2025, and we've seen the resiliency of the crypto market in recent weeks. What type of movement do you anticipate we'll see with the Bitcoin in the new year?
So in 2025, other than the rate cutting that we actually started to observe in 2023-24 in terms of how that impacted cryptocurrency industry in general, I think 25 there are also other key things that will impact cryptocurrency industry in general. Number one is after Donald Trump's becoming the president, we see the whole new administration actually replaced with more economic pro kind of experts there. He also had lots of crypto experts and advisors in his team. I happen to know many of them. And I think they are discussing from one of the conversations I had like early December this year with one of his crypto advisor, is that they do have lots of plans coming up, although nothing is concrete yet. We as a global exchange, we are also observing what's the US step next for regulating the industry, for coming up new ways of like stimulating and also working around cryptocurrency, not just Bitcoin itself, but also some other stable coins, even meme coin. I know Trump and his son are very positive about certain meme coins. His good friend Elon Musk is also very positive on Doge. So there are different areas in terms of the new regulations and the new administrations how that impacts our industry. And also globally, if you look at some other regions such as Europe, there is MiCA, there's travel rule. In Asia, for example, Hong Kong, Singapore, they each have their very specific regulatory frameworks coming up or established already. So they are redefining some laws, but basically around the world, especially the more developed countries, are each coming up with new plans about using Bitcoin as a store of value, a hedge against unstable economy, as well as regulating the industry.
Now, briefly tell us, I think we have about 30 seconds left before we have to go to the opening bell, but what other exciting headlines are you following in this industry just this past week?
Just this past week, so last week we had MicroStrategy still buying more Bitcoin, and Michael Saylor himself coming out a lot, stating their stand about Bitcoin. I noticed that Microsoft about a week ago also voted against investing in cryptocurrency, I think largely due to their investor profile or shareholder are not that familiar with cryptocurrency, and they think there are intrinsic risks in the asset class. The founder of Microsoft, Bill Gates, is not a big fan of Bitcoin in general. I think he stated that very clearly earlier. And then we see, like either today or yesterday, that El Salvador also limit the IMF deal. They have made a deal with IMF and received its first 1.4 billion loan in exchange of revisiting the Bitcoin strategy. So these are very interesting things happening around the world.
And I'm sure we're going to continue to follow these conversations as they unfold. Thank you so much. That was Gracie Chen, CEO of BetGet. Now the opening bell is just a few moments away, so don't go anywhere.
Right now, you're starting to see some trades develop. You can argue it a couple of different ways. Stanley Druckenmiller just this week argued that market's pricing in a Trump victory. If you look at things like small caps and cyclicals and Bitcoin, areas that might get deregulated more, might force more M&A, that's very much a Trumpian trade. And Druckenmiller's point was that if you look inside the market of the internals, you're seeing that. Others would argue, well, if you're counting on a Trump presidency to withdraw from, say, Ukraine, then why is Raytheon at all-time highs? Why is Lockheed at all-time highs? Why aren't a lot of exporters pulling back in their stock price if, in fact, we're going to be putting universal tariffs with the risk of retaliatory tariffs from other countries? So you can kind of slice and dice it any way you want. The Times did a piece a couple of days ago looking at how Harris's economic policy has evolved. And part of their argument was that she's been listening to some Wall Street business types and even some West Coast business leaders, Mark Cuban, Aaron Levy, Reid Hoffman, Reed Hastings, who have all come to her support and maybe are whispering in her ear, hey, we would love it if you'd just take an easier stance on antitrust or crypto or all things like that it would very much be in a business-friendly manner. So, is she listening to that? There's a difference between what you say to a voter and what you say to a donor. And some of the conversations we've heard about among the donors is that she is saying, I hear you. At the beginning of the year, we were counting on 6 Fed cuts this year. We didn't get that. Markets at record highs. So, in fact, the whole hiking cycle, the bull market has just gotten stronger and stronger. So we have this discussion a lot on air. Oh, the market's going to be so disappointed if we don't get the Fed cuts. No, the market.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler. Well, soon NYSE-listed company Assured Guaranty is going to celebrate the opening bell. And with more, I want to bring in my colleague, Trinity Chavez.
That's right, Kristen. We're about 20 seconds out from watching Assured Guaranty. They are here to celebrate their 20th listing anniversary here at the exchange. They are up there on that bell podium right now as they get ready to open up the U.S. equity markets. We're going to continue to cover this throughout the show, but let's tune into that bell.
All right, we are officially off to the races. That is the opening bell here at the New York Stock Exchange. Assured Guaranty opening the markets on this Friday after what has been an extremely busy week with a lot of economic data, including a Fed decision. And joining me now with more as the market has opened is Jim Bianco. He's a president and macro strategist at Bianco Research. Jim, it's great to have you on here on this Friday, and stocks taking a pause today after some volatility that we've seen this week. What should our viewers make of it?
You know, it seems like that the bond market or interest rates are reasserting themselves on the stock market, the credit markets, and a lot of other risky markets. The Federal Reserve cut rates on Wednesday, hinted that they might cut rates again into 2025. But if you read the wording of what they said, it was actually an argument to raise rates. So it left the market a little bit confused, I think, and unsure about the Fed's commitment to tackling what seems to be an incipient inflation problem. We can't get the inflation rate anywhere near their target of 3%. And if the Fed is not going to be serious about fighting inflation, maybe bond investors aren't going to be serious about owning bonds, and higher interest rates are going to bother everything, not the least bit the stock market.
So what does this mean, Jim, for equities going forward? Investors have seen the volatility this week. I think they're wondering, is it likely that this could last?
Higher rates could last. I think that that's definitely the case. But for investors, this is not 2019. This is not there is no alternative or TINA. This is a bond market now that high quality investment grade bonds can give you about a 5% return, or at least a 5% coupon year in and year out. With the stock market given its current valuations, what should you expect the stock market to give you year in and year out over the next several years? Probably about 6% or 7%. I know we've had 25% years in the last couple of years, and I know everybody wants to believe that that will continue. Maybe it does for another year or two, but given the valuations, you shouldn't expect more than 6 or 7%. In other words, the bond market is now real competition for equities. So people could say, look, I could reach for the stock market and over many years look for a 6% return with a lot of volatility, or I could get a 5% return in the bond market with a lot less volatility.
Here's a question for you, Jim. We saw the president-elect Donald Trump here at the stock exchange just last week, joined by his family and many members of his cabinet, including the Commerce Secretary, as well as his pick for Treasury Secretary. We've seen clues that the president-elect wants the stock market to perform well. How does that factor into all of this?
Oh, I think it factors in a lot. That the expectations are the government is going to be very stimulative. There will be tax cuts, there will be deregulation, and maybe on the inflation side, there might be a little bit of tariffs. So you could look at this and say, great, that means earnings are going to probably be doing well. That means investors will be confident to buy stocks. Yes. But on the other side of the equation, that means that bond investors are going to say, I'm out of here, and you're going to have to contend with ever higher levels of interest rates. And as I said, if you think that the stock market has a 6 or 7% return over the next several years, and that's a realistic option, then the bond market, if yields continue to go higher, will provide that counterbalance or that competition, something we hadn't seen until very recently from bonds.
Interesting. So I do want to ask you, Jim, about this potential government shutdown that could happen tonight. We had seen some of the weakness in equities early this morning after a House bill failed to pass late yesterday. How does that factor in?
Well, keep in mind the big thing about this shutdown is that it will not result in any kind of a government default on the Treasury debt. That it's always the debt ceiling limit is not due until January 1st, and then the Treasury has what they refer to as extraordinary means that they could probably push off a potential default for several months. So a government shutdown, you have to view it kind of like you would view a drastic federal spending cut, because that's effectively what it is. It means that the government's going to spend less money. It means that the government is going to have less, optional services. Essential services will continue. And some workers will get furloughed, but at the end of the day, everybody will get paid. In other words, I would argue to you that a government shutdown is probably bond bullish more than anything else. But given the cross currents of inflation, strong growth, stimulus from a new administration, that's not playing in the bond market right now. But I don't think it is necessarily a catastrophic financial market event unless you have me back in 2 months and we're still in a government shutdown. Then it might start to metastasize into something worse.
Jim Bianco, president and macro strategist at Bianco Research. Jim, thank you so much for joining.
Thank you.
All right, well, coming up, we'll talk data breaches. They are a chief concern when it comes to cybersecurity, and the CEO of one firm will tell us how his company is keeping clients safe on the other side.
A pleasure. So I want to start off by talking about the company. Tell me about FISNA.
FISNA is short for physical DNA, and what we do is we analyze the physical world and turn it into code. And what that really means is that we open up the floodgates of all the potential of AI to what's physical, and we're able to do things that weren't possible in 3D before, right? We can take 3D designs and use them to automate things like have autofill for 3D. We can improve supply chain decisions so that you're able to find same part from a different vendor because it has a different part number, and save a lot of money that way, and make a lot of other intelligent decisions for your company or your Department of Defense in some cases, another group we work with, for things like inventory management, part acquisition, part maintenance, et cetera. And so we work in a various number of industries, but it's been great. Over the past year, our revenue has grown about 10x year over year, and a lot more to come this coming year. And it's been great we've got great supporters. We have Sequoia Capital behind us, Drive Capital, Google Ventures, and several others that have been fantastic to work with.
So now, when it comes to search, what do you have here that others can't do?
So the secret sauce that we have is this patent around 3D intelligence. And that really allows us to normalize that 3D data and essentially allow computers to do everything with the physical world that they were previously able to do or currently able to do with things like text, right? So being able to identify, in some cases, manipulations that have happened to 3D models that might have happened as a result of like a cyber attack, or things like, as I mentioned, autofill or procurement decisions. Is this the same part? Is there a deviation in the part? Can we use this as a suitable alternative? And getting really deep intelligence out of models that weren't possible before. It's kind of akin to if you were, let's say you were a healthcare company and you were trying to use AI to evaluate humans and how you can help them. Well, right now in the 3D world, think of it like analyzing pictures.
Welcome back to NYSE TV Live. I'm Trinity Chavez. Now, this week marks the 1-year anniversary since the SEC's cyber incident reporting rules went into effect, now requiring public traded companies to disclose major cybersecurity incidents. But new research from BreachRx suggests that many companies are still struggling with how and when to report these incidents, and even more importantly, how to provide enough detail to avoid SEC enforcement actions. To break it all down, we're joined now by Andy Lunsford. He is the founder and CEO of BreachRx. Good morning, Andy.
Morning, Trinity.
Now, Andy, this week marks the 1-year anniversary, as I said in the lead-in, of the SEC's cyber incident reporting rules. From your research, what key trends or patterns have you observed in how companies have complied with these regulations so far?
I think one of the biggest surprises that we saw was that not enough people are actually disclosing. I think that the volume of incidents reported was much lower than most were expecting, given the volume of attacks, the number of incidents companies face every year. I think there's also a lot of revelation in the research on the fact that there's some confusion as to what type of incident to report, or if it's material or not, and what type of filing to submit. And that led the SEC to actually put out some additional guidance on the difference between a 105 material incident versus an 801 voluntary reporting of an incident. And those are some of the trends.
And you've noted confusion and caution among companies about when to file under the SEC's reporting rules. So what are the main reasons for this uncertainty, and how can businesses better navigate these requirements?
I think the transition from trying not to report too much to provide that was going to create additional liability for companies. I think, as coming at it from a legal perspective, I'm 20 years a security lawyer, and there's a fear that you're going to create more liability by reporting too much about an incident. But the reality is this new rule and a lot of the 200 plus global rules we have worldwide, they really want more transparency. The regulators want to say, hey, what are the incidents you're facing? Can you give us details about how you're responding to them? Are you dealing with them responsibly? And from their perspective, they feel like that's very material information for investors to know in making their investment decisions.
And the data that you've analyzed suggests a general failure to provide enough information in SEC filings. What specific gaps are you seeing in these reports, and how could disclosure better help protect companies from future enforcement actions?
Yeah, most of the reports that we saw, most of the filings have very boilerplate language, so it doesn't really give the investor a lot of information about the incident and what's actually happening. It's pretty high level. And so I think we're seeing that with some of the enforcement actions that are about the rules pre-new rules going into effect last year. The SEC is saying, hey, we need more detail than what you're providing, not just the boilerplate language. And so I think if companies want to avoid enforcement actions, they really need to be revealing more in these incident filings than what has been shown over the last year.
Now, in your opinion, how effective have the SEC rules been in informing investors about the company's cyber incident response and risk management practices?
I would say that early results are pretty minimal. I don't think it's really achieved what the SEC was hoping it would. And I think you'll see either more guidance coming from the SEC or enforcement actions that are going to actually push companies to provide the level of transparency that they're looking for here in the coming years.
Now, with the new administration taking place in January, looking ahead to 2025, talk to me about how you see the landscape in cybersecurity evolving over the near term, especially in light of the recent SEC enforcement actions and the upcoming regulatory changes.
Yeah, I think, unlike some areas that the SEC is regulating, like cryptocurrency, where it's a little more clear there's going to be a really market change, I don't think we've got that level of information with the new administration yet as to what they're going to do from a cybersecurity perspective. It's actually a pretty bipartisan issue to want strong cybersecurity in place. We're seeing the Texas AG, as an example, comes from the Republican side of the House, is really aggressive when it comes to enforcing privacy and cybersecurity-oriented rules. And so it's not clear what the new administration will do on that front. Even if they don't bring as many enforcement actions against companies, there is a real desire from the newly nominated SEC chair for personal liability and really holding people personally responsible. So I think we'll see both CISOs and even CEOs on the hot seat when it comes to some of these issues around cybersecurity.
Now, Andy, as the founder of BreachRx, you assist companies in preparing for and responding to cyber incidents. What advice would you give businesses today to improve their compliance with SEC rules and better manage their cybersecurity risks going into the new year?
Yeah, incidents are an inevitable situation for any company, and so it's really about being proactively prepared with a systematic approach. And so we've built technology that really enables companies to deal with incidents in an automated way, a repeatable way, so that when the FTC or any regulator comes knocking, you can really show your work and say, hey, we take this seriously. We know incidents are going to happen. We prepared a very sophisticated system to deal with them so that we're dealing with them in a really quick manner and making sure we're protecting our consumer information and really ultimately protecting the stakeholders and investors at the end of the day as well.
A lot of important information right there. Thank you again, Andy Lunsford. He is the founder and CEO of BreachRx.
Thanks, Trinity.
Now, coming up, we're going to get into the holiday spirit. One event just across from the Hudson River says that it's expecting over 1,000 visitors this weekend. We're going to learn more about it up next.
So Wipro is one of the leading global technology services companies. We are over 230,000 people, headquartered in India.
Oh, wow.
And our focus is on AI and leading with our AI strategy. So bringing AI into everything we do, our tools, our solutions, and our platforms to help our clients drive value.
What is the problem that you're trying to solve, though?
So all of our clients are looking for new sources of revenue, driving improved client experience, and delivering more profitability. So AI has the opportunity to truly revolutionize every industry, banking and financial services alike. And the opportunity with AI we're already seeing in terms of clients leveraging it to improve their experience, whether it's their financial advisors or their retail banking clients, to really make sure that they're giving that high-touch, trusted experience.
Are there any specific sectors that you're focused on from a business standpoint?
Yes, our wealth management for AI. We did a survey of 100 C-level execs in wealth management, and we found over 44% of them are already extensively using AI in their wealth management business, and 72% of them are already seeing it improved their competitive advantage, meaning the insights they have are making them work better with their clients. So what we're doing with wealth management, we're partnering with Microsoft as well, is to deliver a high-touch experience. So think about ultra-high net worth clients who have $100 million. They have financial advisors who take very good care of them. How do you bring that down to the clients that are 1 to 10 million, the mass affluent who are even below 1 million? How do you create that high-touch experience? And that's what we help our clients do with the platforms and solutions that we bring to them, and leading with AI.
And how are you implementing your AI strategy, right, when it comes to investments?
Yeah, so last year we announced $1 billion investment in AI. And since then, we started with making sure we trained all of our employees on response.
3, 2, 1.
Thank you, everyone, for watching NYSE TV Live. You were just looking at the 101st NYSE tree lighting that took place earlier this month. The excitement was palpable outside of the stock exchange in our Experience Square. More than 35 activations line the streets of Wall & Broad, giving away free swag and products to attendees. One company participating in those festivities was the NYSE-listed company Bath & Body Works. It also rang the opening bell that day. Well, our Judy Shaw sat down with the company's chief executive to talk 3 decades of success. Take a look.
Gina, welcome to Floor Talk. It's great to have you on the show.
Thank you. Thank you for having me, Judy.
So, Gina, tell me, how has Bath & Body Works' focus on fragrance driven its success and customer loyalty for the past 30 years?
It's been an incredible, incredible brand, and I'm so honored, actually, to be leading it for the last 2 years. This is actually my 2nd-year anniversary, and the source of it has been just this incredible fragrance forward positioning. And if you haven't checked lately, fragrance is on trend for some time now, and we put fragrance in 12 to 13 forms. And what that means is we can have these beautiful candles, and that can be Winter Candy Apple, which, by the way, is celebrating its 25th anniversary today. So to your point about 3 decades of performance, but we can also put that in a foaming hand soap. We can put it in a pocket back hand sanitizer. We can put it in a fine fragrance mist. And while that seems simple, it is actually quite a feat to put a fragrance across all those different forms, and customers love it. They want to smell head to toe with fragrance. So it's a wonderful differentiated business model.
Head to toe and home.
True, right?
So now you recently released your Q3 earnings. What were some of the highlights?
We were really pleased with our third quarter. We beat expectations on the top and bottom line. We saw store traffic and conversion be positive and exceeding the benchmarks that we also track, which was great to see. We also had every major category grow. So that for us, that is body care, that is home fragrance, and that's soaps and sanitizers. So all growing. We had some great newness as well. We're known for our innovation and our newness. We did a collab. The one that we have out right now is Emily in Paris, which is great. But in the third quarter, we had Stranger Things, which is another part of our Netflix partnership. That really lifted Halloween in the third quarter, which came in at double digit for that collection. So we're really excited, and there was a pretty much all cylinders for the third quarter when we think about it.
Now, you're here today, you're actually celebrating Candle Day.
Yes.
So tell me, how has that day shaped customer engagement and turned into such a special event?
I joined the company on Candle Day in 2022, and what a first day, I can say. Customers line up before 6 in the morning, this would be tomorrow, matching outfits. They really get into it. They want to be able to find across our 140 exclusive fragrances, fragrance candles, which ones they would pick up, because to our customers, it's like the holiday season has arrived.
Wow. Okay, so now it's the holiday season. Tell me, what are some of the popular scents this season?
We have something called Perfect in Pink, which is a beautiful bow. It has an aesthetic that's stunning. We also have something called Platinum. That's another new scent. That's more bergamot patchouli, and it's metallic, which is very much on trend as well. So those are two new ones that we have. But honestly, there's something for everyone in Bath & Body Works. If you came into our stores and you had no time, you could pick up a beautifully already wrapped grab-and-go gift set, which would include a lot of those forms that I described earlier, anywhere from a $10 gift set to a $50. So we have something for everyone at all different price points. And that is actually, our strength as well, is that we meet the customer where they are at.
And I have to say, I wish that we had smell-o-vision right now, because if our viewers could smell the trading floor today, it is just the most amazing scent down here. I think we should be doing this every day, and I'd love to have Bath & Body Works here on the floor.
We certainly could set up, we have a very large wallflower wallflower business, which is basically the scented plugs that you put in. I think we could set up the exchange with some scented wallflower plugs, and you could smell this every single day.
Wonderful. Well, Gina, it's been wonderful to talk with you.
Likewise,
thank you for celebrating here with us today, being a part of our tree lighting, our 101st. And
Thank you.
It's wonderful to celebrate Candle Day with you.
Thank you.
And thanks to Judy Shaw for that interview. And I must say, those candles do smell good. Well, the holiday celebrations span far and wide. And joining me now to talk about what is going on near us in Lower Manhattan is Alyssa Dobles. She's marketing and art market manager for the historic Downtown Special Improvement District. It collaborates with local businesses, property owners, and city government to enhance the downtown Jersey City area just across the Hudson River from where we are in Lower Manhattan. Alyssa, welcome and happy holidays.
Happy holidays. Thanks for having me.
It's great to have you. I must admit, I haven't ventured to Jersey City yet this holiday season. Oh, no. It's been very busy here in Manhattan, especially in Lower Manhattan. What is taking place in Jersey City?
Yeah, so right now we're hosting our Happy Holiday Markets, which is Saturday and Sunday from 12 o'clock to 6 o'clock. We have over 40 different vendors every single day who are all handmade and based in Jersey City and New York. So we have bounce houses, we have brunch, we have festive cocktails, a rooftop shopping area at the Ashford.
Wow.
We have facials, we have all kinds of different artists, candles, makers, vintage, anything you can think of.
What is the best way for our viewers to take advantage of this?
Yeah, definitely is to hop on a path or hop on the subway and get to Jersey City. You get off right at Grove Street, and Newark Avenue is filled with all kinds of restaurants and shopping opportunities, along with our Happy Holiday Market, which is free to attend.
What are the hours that it's opened?
12 o'clock to 6 o'clock.
Okay, so good thing to do during the day, including on the weekends, is that right?
Absolutely. Even better, once 6 o'clock rolls around, you can go out and treat yourself to a cocktail or to dinner at one of the fantastic restaurants that are on Newark Avenue and Grove Street.
And it's open to everyone. You don't just have to be a New Jersey resident. Is that the case?
No, absolutely not. Everyone's welcome to join us.
Amazing. Talk to me more about the efforts that you take part in throughout the year to keep Jersey City in tip-top shape.
Sure. The HDSID, it stands for Historic Downtown Special Improvement District. And what we do year-round is maintain the historic downtown area by taking out the trash and having our clean team 7 days a week, promoting all the local businesses in the area on social media, and also decorating for the holidays and making sure we have fun events year-round for people to come visit and connect as a community.
I know for a lot of people visiting Jersey City might not be the first thing that they think of, but it is very alluring, of course, if you are down here in Lower Manhattan, as you mentioned, an easy commute as well. What have you seen so far taking place this year in terms of people visiting the festivities?
So the attendance has skyrocketed in the past couple years. We've had a lot of people who have moved from New York to New Jersey, or some people who are trying to escape the crowds of Manhattan and get away for a quaint weekend, week, or even a night trip to Jersey City. It's been fantastic in terms of increased vendors, all kinds of different vendors coming from all over New Jersey and New York, as well as different visitors who are exploring Jersey City for the first time.
Is there any cost?
No, definitely not. All of our events are free throughout the year.
Amazing. Okay, and 12 to 6, you said, 6 p.m. that is. And
Yes.
so how long can people take advantage of it? Maybe they're busy or traveling this week. Does this go into the new year?
Unfortunately, our market ends this Sunday, the
Okay.
22nd. But we will be back with our Handmade Market series, which begins on May 7th and is open every Wednesday and Saturday.
Okay, so people should definitely get to Jersey City this weekend if you're in the New York City area. It is a beautiful area, and I must say that the views of Manhattan are gorgeous as well. So something I would recommend. Tell me more about what is on tap in May.
Sure. So May is the beginning of our Handmade Market series, which is a continuation of artists, hand makers from across New Jersey, New York, as well as live music performances for Groove on Grove, which anyone can come and enjoy local artists who perform on stage all summer long.
Alyssa, I hope our viewers can join. I am a big fan of Jersey City. A lot of people down here in the financial community on Wall Street are as well. That's Alyssa Doble. She's marketing and art market manager for the historic Downtown Special Improvement District in Jersey City. Alyssa, thank you.
Thank you.
All right, well, we are set to wrap up what has been a very busy week. Yes, we've got the holidays, but we also had a Fed decision and a whole host of economic data. I want to bring in my colleague, Trinity Chavez. Trinity, we have been covering a lot. We also had that Bath & Body Works segment, and I know you can vouch for it as well. Those candles smelled pretty good.
I have to say that I snagged a few off of the trading floor when Judy was doing her interview, and they were here celebrating Candle Day, and they smell absolutely incredible, Kristen. But I have to say, listening to all of the festivities that you can do in Jersey City in your interview, I've never been there, but now I definitely want to visit. It sounds like an exciting time. And you know, Christmas is also very magical here in the city.
Trinity, you got to let me know if you make it to Jersey City this weekend.
Maybe we could do like a field trip or something, like a group outing.
I would like that. I know. I think we got maybe a little bit of snow, but snow is not going to stop us anytime here in Manhattan.
It's going to be amazing if we have a white Christmas this year. We haven't seen one of those in this city in so long, so I'm crossing my fingers. Hopefully we'll get a little bit of snow today that'll stick around, pun intended, for the Christmas holiday, Kristen.
I'm right there with you, Trinity. And for all of our viewers watching, we, of course, wish you a happy holidays. We'll be live like usual next week. But, of course, we wish you safe travels if you are traveling. For Trinity Chavez, Kristen Scholler, our entire NYSE TV Live team, have a wonderful weekend. Enjoy Jersey City, and we'll see you on Monday.
Thank you for being innovators in the market. Thank you for all you do every day to show the world what best in class truly means.
We are incredibly proud to join the ranks of other highly successful companies who partnered with this legendary institution.
What a time to be here. I am so proud of what we're doing.
This is a huge milestone for our business. There's a lot of people responsible for getting to where we are today.
We have a role to play in bridging the gaps that exist today between us.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. I'm so optimistic about what lies ahead. It has been a privilege to be with you.